You know, the crypto world definitely throws some wild curves at you, but what happened with Mantra, the OM token, that felt less like a curve, more like falling off a cliff.
Oh, absolutely. A straight up cliff dive, like you said.
We're talking, what, 90% of its value just vanished in an hour. It really, really makes you wonder what's happening under the hood.
It does. And it's the kind of thing that sends shockwaves, makes everyone reevaluate. Even projects that seem pretty solid, it just shows how volatile things can still be.
Exactly. And that's why we wanted to dig into this. You sent over that really good Decrypt article about the whole Mantra meltdown.
Right.
So our mission here in this deep dive is to figure out, okay, what exactly sparked this crazy crash? What did the team say right away? And maybe more importantly, what does this tell us about the bigger picture, like real world asset tokenization, RWAs? Does this whole thing show some cracks there?
That's the million-dollar question, isn't it? We'll pull apart the details from that Decrypt piece, look at the initial reports, the different takes, and hopefully give you a really clear understanding of what went down and, what it might mean without getting lost in the weeds.
Okay, perfect. Let's get right into it then. The crash itself. The article says Sunday, April 13th, 2025, Mantra OM just took an absolute beating.
Brutal is the word. Over 90% gone in just 60 minutes. It's kind of hard to wrap your head around that speed.
Totally. The article gives them the numbers. It went from nearly $6 down below $40.
40 cents. Imagine the market value you just wiped out. Poof.
It's not just abstract numbers. That's real money, real investors affected, right? And yeah, the piece mentions a bit of a recovery. CoinGecko showed it bouncing back to maybe $0.80 or so.
It's like a slight pickup.
And this is wild. The article points out it peaked back in February at nearly $9.99.
Puts it in perspective, doesn't it?
Seriously, going from almost $9 to under $1.40, even with a tiny recovery, something major had to be going on. No doubt. And Decrypt is right to call it one of the steepest single-day drops we've seen this year. This wasn't just a little market correction.
Not even close. So, all right, the big question, why? What caused this nosedive? The Decrypt article focuses on the Mantra team's first explanation. They blamed reckless liquidations.
Okay, reckless liquidations. Let's unpack that.
Yeah, what does that mean exactly?
So the idea is a huge wave of forced selling. The article actually quotes the co-founder, John Patrick Mullen, on X. He said positions were closed without margin calls or notice.
Okay, wait. No margin calls, no notice. That sounds unusual.
It does. That's a key part of their claim. Mullen suggested it was actions by exchanges that really kicked things off. A very sudden closure of account positions, he called it.
And he mentioned this happened during a low liquidity period, like not many buyers around.
Exactly. And if you have a forced sell-off when there aren't many buyers, that price just plummets even faster. It amplifies the whole effect.
So the lack of a margin call is the smoking gun in their view. Usually you get a chance to add funds, right?
Typically, yes. The exchange says, hey, your position's underwater, add more collateral or we sell. The fact that Mullen claims this didn't happen points the finger, at least from his perspective, towards how the exchange handled things. Maybe something unusual, maybe even problematic.
Gotcha. And of course, as soon as this happened, the crypto world lit up. You saw the term rug pull flying around, people getting suspicious instantly. It's almost a reflex when you see a price chart like that.
But the Decrypt article makes it very clear. The Mantra team flat out denied it. No rug pull, no insiders dumping tokens.
Absolutely crucial. They addressed that immediately. They needed to push back hard against those fears. They even included that their own team tokens are still locked up, verifiable on the blockchain. Basically saying, look, our hands are clean. This wasn't us cashing out.
Right? Trying to maintain whatever trust they could, showing they're still invested. Okay, so for anyone listening who isn't like living and breathing crypto terms, forced liquidation, can we simplify that?
Yeah, good idea. Think of it like using leverage, maybe borrowing money to buy more stock than you could afford outright. If the stock price suddenly tanks, your broker might automatically sell your shares to cover the loan before your losses get too big.
Okay.
In crypto, especially with margin trading, people borrow funds to make bigger bets. If the price moves against them sharply, the exchange's systems automatically sell their crypto assets to pay back what was borrowed. That's the forced liquidation.
And if lots of people get liquidated at once?
Exactly. It creates this cascade of selling pressure, pushing the price down further, triggering more liquidations. It's a domino effect.
Okay, that makes sense. So huge crash, team blames liquidations, denies wrongdoing. But let's zoom out. What is Mantra? What's their whole deal? The Decrypt article positions them as a layer 1 blockchain, right, with this specific focus.
That's right. Their main goal, their niche, is tokenizing real-world assets, RWAs, and doing it in a way that ticks all the regulatory boxes. They want to bring things like, real estate, maybe art, commodities onto the blockchain compliantly.
That's a pretty hot area in crypto right now. RWA, huge potential.
Yeah, if they can crack it.
And the article mentions the tech behind it. Cosmos SDK, IBC, Cosmos. What does that mean for their RWA plans?
Basically, the Cosmos SDK lets them build a blockchain specifically tailored for RWA needs, maybe embedding compliance features right in. IBC, inter-blockchain communication, is super important. It lets different blockchains talk to each other, like trading assets across chains.
Exactly. Imagine trading your tokenized apartment share on Mantra for some stablecoin on another network. IBC enables that kind of interoperability, which you absolutely need for real-world stuff. And Cosmos adds powerful smart contract abilities. So the tech is there to support their ambitions.
Okay, that interconnectedness sounds key, but a crash like this, it's got to make partners nervous, right? Decrypt mentions some big names linked with Mantra, Google Cloud, Damac Group from Dubai.
Oh, definitely. When you have established players like Google Cloud or a huge developer like Damac involved, it gives the project a lot of credibility. An event like this, 90% drop, it forces them to pause and ask questions.
They'd be wondering what happened, if it affects their collaboration.
For sure. They'll be looking into it, assessing the situation, the causes, any potential fallout for their own involvement. It definitely adds a layer of uncertainty they didn't have before.
And it's not just those partners. The article quotes Hank Hang, CEO of Krenos Research. He raised a broader point about overall confidence in RWA tokens.
Yeah, that was a really sharp observation from Hang. He basically said this incident suggests the whole RWA sector, while promising, is still pretty new, still in its infancy. I think he said needs more work on the infrastructure.
Exactly.
He talked about the mounting pressure for these projects to get compliance, security, transparency, right? And a crash like Mantra's, well, it highlights the potential vulnerabilities. If people start thinking RWA tokens are just as wildly unstable, it could seriously slow down mainstream adoption.
So it's like, this isn't just a Mantra headache. It could make everyone developing or investing in RWAs a bit more cautious.
It could, yeah. Trust is everything, especially when you're trying to bring traditional assets into this new digital space. An event like this chips away at that trust if it's not explained clearly and if steps aren't taken to prevent repeats. It raises big questions about the guardrails needed.